Hello students, in present video I am going to explain about the meaning and examples of non-insurable risk. Non-insurable risk is also known as uninsurable risk. I made a separate video on insurance topic where I covered the meaning and the principles of insurance. Video link is provided in the description box and in icon. Let us see the meaning of the word risk. Our life and our property are always at risk. Risk means uncertainty. Uncertainty means the possibility of getting losses. Insurance companies are always ready to offer insurance policies against this risk. Only the thing is, they expect some sufficient premiums from insured. However, insurance companies cannot cover all risks. The risks which are covered by insurance companies are known as insurable risks. And the risk that cannot be covered by an insurance contract is known as non-insurable or uninsurable risk. Every insurance company gives priority to 2 points. First one, sufficient profits from insurance contracts. Second point, maintaining the financial stability to meet the compensations of policyholders. If any insurance proposal is not profitable to the company, or if it adversely affects the financial stability of insurance company, then company may refuse to cover that risk. That risk is known as non-insurable risk. It is very difficult to decide whether one risk comes under non-insurable or insurable. Based on the risk involved in that proposal, insurance company decides whether to cover that risk or not. So based on the historical data, an attempt is made in this video to give some examples for non-insurable risks. So let us see the examples of non-insurable risks. First example for non-insurable risk is the risk which is too likely to occur. If insurance company considers an event which is sure to occur, company may refuse to issue the policy against that risk because company knows very well that that policy becomes a claim definitely. For example, take life insurance policy. Company cannot cover a person's life who is 99 years old. Similarly, if a person is suffering from a non-curable disease, for example AIDS or terminal cancer means non-curable cancer, then company cannot cover that person's life because company knows very well that that person dies before the maturity period. So without collecting premiums fully, company has to pay the compensation to his family members, which is a loss to company. Similarly, take property insurances. For example, a home is located in risky zone such as flood zone or a zone where there are frequent earthquakes and property damages. If company issues policy on this type of homes, definitely that policy becomes claim, which is a loss to company. And company cannot issue a policy on the loss of depreciation on fixed assets because if fixed assets such as machinery, furniture, building, if they are used continuously, definitely its value decreases. That loss is known as depreciation. Here also that policy becomes a claim. So if insurance company knows that a risk is certain, then company may refuse to issue the policy. Second one is unpredictable risk where loss cannot be calculated. Some risks are unpredictable in nature. Insurance companies cannot predict them, cannot estimate them. As we cannot estimate the risk, we cannot calculate the loss in monetary terms. When loss cannot be calculated, insurance company cannot fix the premium also. As premium cannot be fixed, insurance company may refuse to cover this type of risk. Examples for unpredictable losses are loss incurred as a result of inefficient management. Inefficient management means, for example, lack of proper planning. or wrong policies, wrong decisions, or ineffective control, etc. We cannot predict the loss which business organization is going to face due to inefficient management. Similarly, dynamic risk cannot be insured. Dynamic risk means the risk of loss due to changes in society. These changes may be economical changes, cultural changes, political changes, environmental changes, social changes, or technological changes. Technological changes. For example, 5G is coming in the place of 4G. These changes may result in loss to businessmen, but we cannot predict that loss. So, these changes are not insurable. Dynamic risk may result in loss to businessman, but they are beneficial to the society in long run. For example, technology is improved. For businessman, it may be a loss because existing machinery may become obsolete and he may have to replace them with new assets. But for society, it is beneficial because society can get quality product at lesser prices. Let us see some examples for dynamic risk. First example is fall in demand due to change in consumer preferences. Consumer preferences means fashion, trend. Trend changes as time passes. Then present product becomes outdated and demand may decrease for that product. It is a loss. But we cannot predict this loss. Similarly, second example is loss due to changes in price level. Increasing raw material prices, increasing wages, increasing overheads may lead to increase in product price. A businessman may increase the product price, but customer may not be in a position to pay more to acquire that product. As a result of that, demand decreases for that product, which is a loss to businessman. These two losses we cannot predict well in advance, and we cannot calculate the value of this loss in monetary terms. So, these two losses come under dynamic risk. Third example for unpredictable risk is regulatory risk. Regulatory risk means the loss to the businessman due to the changes in government regulations. For example, changes in international trade policies of government. Suppose the custom duty of rubber imports is increased from 20% to 30%. Then the businessman who is importing rubber to manufacture products has to increase his product price. Next one, tax policy reforms may adversely affect the business. The increase in minimum wage law, the increase in mandate vacation means compulsory leaves and the sick days may increase the administrative expenditure of business and may decrease the productivity. Then new laws to protect the environment and changes in food safety laws may result in increase of expenditure to the business. Money supply policy of RBI and bank credit policy. If there is any changes in these two, it may result in increase of financial expenditure to a businessman. Similarly, the increase in freight rates of airways, waterways, railways may increase the transportation cost of businessman. Thus, changes in all these government regulations may result in losses to businessman. But this risk cannot be insurable because we cannot predict the changes and we cannot calculate the loss due to these changes. Fourth example of unpredictable risk is risk of reputation. Reputation means goodwill. The risk of loss to the company due to the damage of company's goodwill cannot be insured because the loss due to the damage of goodwill cannot be calculated in terms of money. For example, a company launched a new product by conducting a big event. Immediately, there is a recall of that product due to safety hazards. This affects the company's reputation and we cannot insure this risk. With this, second point, unpredictable risk is completed. Now let us move to third one. Third example of non-insurable risk is speculative risk. If the outcome of taking a risk is profit or loss or no profit, no loss, then that risk is known as speculative risk. Gambling, such as cricket betting or betting in horse race or motor race, is the best example of a speculative risk. Suppose a person invested 1 lakh rupees in horse race betting. He is expecting a profit in that, but the result may be a profit or loss. Similarly, investing in stocks or other assets also an example of speculative risk. For example, an investor purchased one company share at 50 rupees each. If market price of that share increases, he gets profit. If market price decreases, he gets loss. If market price remains same 50 rupees for a long period, there is no profit, no loss. Means break-even situation. Another example is launching a new product or opening a new shop. By launching a new product or by opening a new shop, businessman is taking some risk. He is expecting some profit and he is entering into that risk. But the outcome may be a profit or loss. So speculative risks are not insurable because it is difficult to evaluate the loss involved in this risk. Fourth example of non-insurable risk is catastrophic risk. For example, one insurance company issued 1 lakh policies to persons. Most of the group should go without a loss. Then only company can use the pooling of risk principle and a company can earn some profit out of that insurance contracts. Company can meet the claims of affected persons. Suppose 95% of these 1 lakh members suffered a loss at a time. Then for company it is very difficult to pay the claims to everybody. So the total claim amount exceeds the premiums collected from these policyholders. Company becomes bankrupt. If 95% of policyholders are exposed to same risk, then that risk is known as catastrophic risk. So, catastrophic risk affects whole population or a large portion of the population at a time in the same manner irrespective of caste, creed and religion. It is not a personal loss. It is a loss to whole group. It is not in the control of one person. Catastrophic risks are also known as fundamental risks. For example, risk due to acts of God means risk due to natural disasters. For example, earthquake, flood, storm, lightning, tsunami, hurricane, tornado, volcano, snowfall, forest fire, etc. Similarly, terrorist attack, war, radioactivity arising from nuclear fusion. This risk also comes under fundamental risk. Similarly, pandemic risk. Pandemic means it is an outbreak of a disease which affects the whole world or whole country. For example, COVID-19. Then risk due to social phenomenon. For example, bad economy, inflation, unemployment, political instability. All these risks do not come under insurable risks. These are uninsurable risks. By taking traditional insurance policies, one cannot cover this type of risks. Some insurance companies may issue specific insurance policies to cover this type of risk. But risk coverage will be limited and premiums will be high. Fifth example of non-insurable risk is risk too small and recurring too frequently. For example, a hotel cannot insure its crockery against breakages. Last example is risk against society. For example, a thief cannot insure his stolen goods. A smuggler cannot insure his smuggled goods. Similarly, a company cannot insure fines and penalties which company is supposed to pay as a result of committing one unfair trade practice. So these 6 points are the examples of non-insurable risks or uninsurable risks. Hope this video is useful to you. Thank you.